Do you want to lose money investing, or do you want to protect your portfolio? If you're an investor who's seeking to hedge their portfolio against loss in their position they're holding, so today's video is going to be for you. YieldMax ETF has came up with a brand new ETF. This is called Title Trust SLTY or SLTY. The price right now is $49.96, and after hours it seems to be going up about 0.5%, and it's going to be a 50-21. But when this ETF came out this morning, it was around $50. So what this ETF does exactly, and that's what I'm going to show you here in details. But first, let's look at ULTY. So if you're an investor who's holding ULTY, look at this, YieldMax Ultra Option Income Strategy ETF. Today went down. Last night when it closed, it was at 5.72. Today at 5.60 when it opened. So you know what that happens is because they deducted 10 cents that they're going to pay tomorrow. So this is something very normal. Whenever they pay distribution, you see your ETF decline by the same amount they're going to pay. But again, depends on the market condition. It might go down more or it might climb up again. So I hope ULTY keeps going up, because if it stays at this price and every time they pay distribution it keeps falling, then it's going to be a $4 very soon. But hopefully it will climb back to at least the $6, and I hope it stays that way. So what this new ETF SLTY has to do with ULTY, that's a very interesting question. I'm going to show you here. Check this. SLTY, YieldMax Ultra Short Option Income Strategy ETF, meaning this ETF is going to short ULTY positions, meaning if you're holding ULTY and you're losing money, technically this ETF is supposed to be going up because it does the inverse of what ULTY does. And that's when I ask you, do you want to lose money or you want to hedge your portfolio? So if you're an investor who is holding ULTY, then if at the same time you hold SLTY, technically your position on SLTY is supposed to go up as ULTY decline, and vice versa. So this is the way that a lot of people usually use to hedge their portfolio. So you can have half or 20%. It depends on how you want to structure your portfolio. But this is a pretty good. But what I'm worried is that this might not come to fruition as we are expecting. For example, you can see here ULTY today went down by like 0.36%, and SLTY technically, because it's the inverse, is supposed to be going up a little bit, right? But it did not. It also declined. So they both declined at the same time. So if this trend continues, it's going to be very, very risk, and it's not going to have any hedge as you would expect. So that's kind of disappointing. But again, this ETF just came out today. We don't know how it's going to perform going forward. But there's very, very interesting news about this ETF that you might find very interesting, and that has to do with how they're going to pay their distributions. SLTY was incepted yesterday, August 20th, but of course it came to the market today, August 21st. So today was the first day that it started trading. So there's no huge history about this ETF. And when it comes to expense ratio, this is how much you're paying the manager to manage your portfolio. It's going to be 1.24%, a little bit higher, but it's pretty much the same as ULTY because these are very actively managed ETFs. Net asset as of now, we don't have the data yet, but the price, which is a NAV, is about $50. Top holding, so it's going to hold a bunch of stocks, between 15 to 30 stocks, just like ULTY, and it's pretty much the same stock that ULTY is holding, but the only difference is that ULTY is trying to capture the upside of those stocks, while this one is trying to capture the downside of those stocks because these shorts. So whenever these stocks go down, then this ETF will benefit from the decline. Now let's look at more details about SLTY. YieldMax ETFs announces Ultra Short Option Strategy ETF. Chicago, Milwaukee, and New York, August 21st, 2025. As I've mentioned, this ETF was incepted yesterday, which is August 20th. You usually come after hours, and the next day, which is today, would start trading. SLTY overview. SLTY is an actively managed ETF that seeks to generate weekly income while providing short or inverse exposure to the share price of a portfolio of US listed equities. SLTY also seeks to participate from potential declines in the share prices of the underlying stocks. So as I've mentioned, it's going to pay weekly. So this is a good news because as we know, compounding your money weekly is always different than compounding monthly. And a lot of investors are very interested with weekly distribution ETFs rather than monthly. SLTY portfolio construction. So this is very important, guys. SLTY advisors will typically select between 15 and 30 underlying stocks to which the fund provides a short or invest exposure. SLTY seeks to generate income primarily through using options strategies on the short stock positions. One such strategy is selling or running put options, which allows SLTY to collect the premiums from buyers who pay for the right to transact in the underlying stocks at a predetermined price. Depending on the advisor's outlook, the advisor may employ one options strategy or a combination of options strategies that it believes will best provide SLTY with the current income while also seeking to benefit from decreases in the share price of the underlying stocks. SLTY portfolio allocation is primarily driven by implied volatility levels, as higher implied volatility usually results in increased options aligning with SLTY's objective of generating weekly income from its positions. Why should you invest in this ETF? SLTY generates weekly income, which is not dependent on the value of the underlying stock. That's number one. And the reason number two why you should invest in this, SLTY aims to participate in some of the potential gains experienced by decrease in the share price of the underlying stock. Again, this is inverse, meaning whenever those stock decreases, this ETF will go up. But the opposite is true, meaning these stocks, when they go up, this ETF will decline. As we've seen, most of YieldMax short option ETFs, they don't really do well. But maybe this will be different because this is collective of a bunch of stocks as compared to the other short ETFs that YieldMax has. I have mentioned two reasons. Now I'm going to give you a bonus reason why you should invest in this, because this ETF does the opposite of what YieldTY is going to do. So for people who have a huge position YieldTY, maybe it's a good idea to have some exposure to this ETF, and that way you're going to be hedged against the decline of YieldTY. But again, when YieldTY goes up, meaning the underlying stock of YieldTY will be going up and this ETF will decline. So that's something you should bear in mind. And again, this is not a financial advice. This is just my opinion. Now, very interesting part is this distribution schedule. SLTY is a newest member of the Ultra YieldMax ETF family. Like all YieldMax ETFs, SLTY aims to deliver income to investors. With respect to distributions, SLTY aims to make distributions on a weekly basis. Very interesting because I know you guys like weekly distributions. And its first distribution is expected to be announced on September 3rd, 2025. So that will be about a couple weeks from now because it has to trade first and it has to make a profit from premium. And if you look at this table here, as you know, these are YieldMax ETFs that they have. They have a bunch of weekly ETFs. They used to be 9 and now they add that one. They're going to be 10. As we can see here, 1, 2, 3, 4, 5, 6, 7, 8, 9. So now they're going to have 10 weekly distributing ETFs. And the rest of ETFs, they pay monthly, or you can say every 4 weeks pretty much, right? For most of them, including MSTY, which is one of the favorite ETF for most people. So now YieldMax keeps adding more ETFs. It's very exciting because now you can pick and choose which ETF you're going to want to invest. And if you want to know which ETF is the best to invest your money from YieldMax, check my video I made a couple days ago. I'm going to leave a link below. That's going to show you the top 3 ETFs that you should consider investing your money. So guys, I just want to keep you an update on a brand new ETF that's going to do inverse of YieldTY. So for people who have position YieldTY, this ETF is going to be a game changer for you to hedge your portfolio. So if you find value in this video, please consider subscribing to this channel and don't forget to hit the notification button so whenever I release new video, you'll be able to get notification. And please smash the like button and don't forget to share with someone you think this video may help. Thank you very much for watching. I'll catch you next one. Bye bye.